Right now, folks, as we do each and every Monday at 3:15 p.m. Eastern Time, we talk to our man Steve Rhodes. You can check out Steve's outstanding newsletter, folks, Mastering Probability, right on the front page of TFNN under the newsletter tab. Don't forget, all the newsletters, 30-day money-back guarantee, folks. You can sign up, whether it's a month at $149. You can sign up for Mastering Probability, 6 months for $695. You save 22% or $199, or the year at $1195. You save $593 or 33%. They all come with a 30-day money-back guarantee, and he's got a bunch of great webinars in there for his subscribers, folks. Among the amazing newsletter he does for his subscribers. Steve Rhodes, good afternoon.
Hey, Tommy, how you doing? Good to be with you.
I'm doing well. How about yourself, man?
Great. I was just looking at my calendar and just realized that next Monday is basically the end of summer, Labor Day. Next Monday. Hard to believe.
It is, and it comes so quickly, man. And and not even Tommy. Tommy's not really in school; he's so young still. But when the kids go back so early here in Florida, Steve, yes. I feel like it ends almost so quickly. I'm used to the Northeast; it really ends thing. But like kids are back, the school's back in session. So It's amazing how the summer just flies, man. For sure.
It does. So I thought we'd do today, and this is really kind of sponsored by a post that was inside the Tiger's Den. It was one of our denners, Mr. Z, and he asked Google AI a question about August tops that had declines greater than 10%. In fact, the exact question was, since 1983, very briefly list years in which the S&P 500 reached record highs in the month of August that were followed by a decline of greater than 10% intraday in the next 90 days. And it shot back the following answers. It gave 1987, 1990, 1997, 98, 2015. 2023 was only an 8.5% decline, but it still kind of showed up there, and obviously the unknown is where we at now. So I thought what I could do, what could I do with this data, which was to go back and take a look at the patterns that were present before the declines. So we'll start with the 1987. And if we take a look at on August 26, 1987, the S&P 500, so where my cursor's at, confirmed a Rhodes Momentum Indicator top. So there was your topping signal. That was August 26, 1987. And the first bottom that we saw was on September 9th. So that top leads to a TD9 count bottom. Again, all these patterns that we're talking about are the patterns that I teach subscribers. These are the workshops that you had mentioned that are available to subscribers as well. That TD9 count bottom takes us to a TD9 count top on October 5th, 1987. And that's when the real waterfall moment, when we really got the so-called the 87 crash out there. And interestingly enough, the crash bottoms with that wide-ranging bar on October 19th, 1987, Tommy, with a TD9 count bottoming pattern. You gotta love it. So we know that at least that first one that Google gave to us, we had signals ahead of time to let us know that there were problems. Didn't let us know what the depth of the decline might be, but certainly did let us know about the tops and bottoms that took place. If we then fast forward to August of 1990, that decline started with a Rhodes Momentum Indicator top that formed actually on July 20th out there. And that bottom that was then put in was with a TD9 count bottom and a Rhodes Momentum Indicator bottom pattern out here. So actually, it was two Rhodes Momentum Indicator bottoms out there. So again, we did get a warning ahead of time. It wasn't right in August, but it was a July 20th, 1990 Rhodes Momentum Indicator top that was present before that decline began. Let's take a look at 1997. That started with a Rhodes Momentum Indicator top on August the 7th. Now, that decline was pretty short-lived, but if we take a look at what then took place, now I know this wasn't the question, but just simply to stick with the patterns that we have out here, October 8, 1997, TD9 count top that forms, that led to quite a precipitous decline out there. So the patterns were present. If we take a look at the 1998 top, well, actually, we can't find a top on July 20th of 1998 when price made that high out there. I can share with you that the bottoms were formed with a TD9 count bottom and a Rhodes Momentum Indicator bottom. But wait, Stevie has more. If we actually when we go from a daily chart to a weekly chart, what we're going to find is the signal for the August decline in 1998 was a weekly Rhodes Momentum Indicator topping pattern. And the bottom was put in with that daily TD9 and Rhodes Momentum Indicator bottoms that we looked at on the prior slide. Here's the prior slide so you can see those bottoms out there. So daily or weekly signals. In 1998, it was the weekly that gave us the actual signal of the top. If we move forward to 2015 and we take a look at the August decline, it actually began with a daily TD9 count top on May 20th out here, all the way back there. We can see that we had two instances where we had rallies that rallied up into that TD9 count top, but never took it out, Tommy. So it was fully active on. And then what we ended up seeing, so here I just identified the end of the month for July, and we can see that precipitous decline. So we did have a TD9 count top that was present that said, be careful, beware. 2023, although it was only 8.5% decline for the month of August, if we take a look at the top that actually formed on July 27th, so not a top that formed and that was really the signal out there, that was another Rhodes momentum indicator top, and price moved lower into October 27th when it formed a TD9 count bottom, a Rhodes momentum indicator bottom, and a wave 7 bottom, part of the Chapman wave arsenal of tools that are out there. So 3 different bottoming signals, and the top forming a Rhodes momentum indicator top. Okay, so in summary, what I would have to say is that markets can be timed. It's simply a matter of learning the patterns that are present at tops and bottoms. I've shared with you the Rhodes Momentum Indicator tool, the TD9 count tool, the Chapman Wave tool that was present out there. So Google's good at certainly at AI and identifying those time periods that answer John's question. But I'd say mastering probability, I'd say that's the real intelligence at identifying the tops and bottoms. So let's fast forward to where we're at today. We won't be here next week, so I won't be able to update you on where we're at with regard to September, and we'll find out that's going to be important. But if we fast forward to today, what we have out here is a daily Rhodes Momentum Indicator top that is present. We also have a TD9 count top. So even Friday's rally did not take that out. Kind of looks like something we just looked at a couple slides ago, where we had an early pattern out there, a top, price rally, didn't take it out. So that is still present. So we've got a daily top. We do not, now that top, by the way, would be negated with a close above 64.8134. So something that folks should write down on their pad of paper and watch during the week. If we take a look at the weekly time frame chart, if we were to see a bearish reversal candle, that would form a sell the D point top. And on a monthly time frame, if we take a look at here, this needs a bearish reversal candle as well, and that would generate a Rhodes Momentum Indicator top. We've got one top that's present. That's really all that we need at this stage here, which is that daily Rhodes Momentum Indicator signal. If we take a look at the 97-year seasonal cycle, this is where September starts to get important. The red vertical line is where we're at right now. We can see that in the early part of September, that's when we typically get that seasonal top that takes us down into mid or late October out there. So important for us to take a look at. Ideally as well, the equal weighted RSP and the EDOW, on Friday, those negated their topping signals. So ideally that top, Tommy, will form when we get confirmed Rhodes Momentum Indicator tops in both the equal weighted ETF for the S&P and for the Dow. So that's what I've got for you. And so I was grateful for John posting that question in there. It really gave me something to really meaningful, I think, to talk about with you for our listeners out there.
I love the breakdown, man. The historical perspective and, history, whether it repeats, whether it rhymes, there's something going on there. So
I do know one thing. There's always going to be a topping pattern. There's going to be a pattern that is out there before we see a decline, and that's the cool thing.
Pattern recognition. I like it, man. Patterns, for sure. Absolutely. Folks, check it out. Mastering Probability comes with a tremendous amount of great webinars, cover a lot of what Steve was talking about there as well, and you get his outstanding newsletter, updates in the morning and at night, weekend as well. Steve, have a great week, man. Great Labor Day, and we'll talk to you in a couple weeks.
You too, Tommy. Take care.
Okay.